Good morning. It's Wednesday, January 15th, about 6 a.m. Central Time. Overnight, the precious metals are higher after yesterday's consolidation and weaker than expected PMI data. Looking at the PMI data release here yesterday, we saw a number come in at 2%. It was 0.2%. The expectations were for 0.4. And then if you look at the core PPI month over month, this is the producer price index, came in at 0.0. The forecast was for 0.2. So that big drop in the number here really was the relief rally that we saw in the metals market. So if you look at gold, it edged higher, got up near $26.85 an ounce, climbing 0.5% when that report showed that U.S. producer price index unexpectedly cooled in December. So some of the analysts out there, guys like UBS and large banks, they had seen gold reach $28.50 an ounce by year end. So they're upping their estimates here for year end price forecast, thinking that this inflation is just an anomaly and it'll peak in that first quarter and start to come down. So they do expect with Trump, there's going to be a little bit of volatility in the markets, especially in the US equity markets. They also believe, and a lot of guys will grab onto this, is that silver forecast $38 an ounce by year end. So blue line futures our target without any kind of real price momentum to the upside. And what I mean by that is people coming in and really chasing that market higher. So this is where you get the people liquidating some of their holdings in the momentum type plays like the NASDAQ, Bitcoin, things like that, and going into the silver market. Typically, we could see just a natural recovery here in things like manufacturing demand, and silver prices could float up to about $36 to $38 an ounce. Now, I do anticipate once we get there, we might get some green shoots where we shoot over that $40 level here, depending on what month we're in and where we're at on the economic cycle. Given that we're not in an economic downturn, we could see that momentum move higher here. So shifting gears over to the oil market, and I'm telling you, in Chicago, it is cold outside. I'm a little bit surprised that natural gas dipping back below that $4 level here. So you look at crude oil futures right near about that $78 a barrel on the last here, and that there's a lot of things coming out, especially with those Russian flows. They continue to reverberate in the market as the International Energy Agency, they're dialing back their bearish views. Remember, everyone was so bearish on the oil market here. So you break out to this upside here. You see old resistance near that low $70 range, now new support. So I expect crude oil futures where we were predicting about the 60 to 70 level, now we've got this ratcheted higher here. So we're going to really want to keep an eye on some of the data that comes out surrounding the oil market. Many of you guys that trade gold or trade silver transition into things like crude oil, transition into things like Bitcoin, and start looking at different commodities out here. Remember, there's about 27 major commodities, and at Blue Line Futures, we write research on all these different commodities on a daily basis. So if you'd like to explore opening up an account with Blue Line Futures, please send an email to info@bluelinefutures.com. So back to the markets here and looking at the overnight price action. So strong recovery in the gold market, pushing back over $2,700 an ounce. We're up here as of this recording about $26, sitting at $27.08. The high in the overnight session, $27.12, low $26.85. That's where we about closed at here yesterday. So a nice push up here. Silver futures still lagging in my opinion here. We had that big dollar sell off here, small recovery yesterday, little bit of a boost here, but the reality is with the recovery in the gold market, I believe that silver futures should be closer to that $31 or slightly higher. We're sitting at $30.68 last, low $30.37. We'll see if that $30 range as we get closer to that, as it sees support. A lot of the people that I talk to, a lot of guys call in, they're looking for any kind of dip below $30 as a long-term value play, especially going out into the year and looking at some of these banks increasing their forecast on silver futures up to about that $36, $38 range. So you shift gears to the currency markets here because it's been a big driver here of the metals and the expectations. You do have the dollar index dipping below that 109 level, sitting at 108.94 last. All the foreign currencies across the board, all surging up just a bit. The grain future is still pushing higher, especially those two, corn and soybeans. Had the bullish USDA report, and then you got a nice recovery in Bitcoin, sitting at 97,400 last. High of the overnight session, about 98,000. A lot of people looking at support between 92 and 88,000, putting on positions. Remember, they do have a micro Bitcoin contract here, and if you're going to get involved with that, you probably want to look at the February contract, as there's not a lot of time coming out, or a lot of time left on that particular contract. So generally what I do when we have a big report, so today's going to be a big event risk day here with the core CPI, the month over month, year over year. They're expecting 0.3% on the core CPI. You go month over month, 0.4. Remember, we've seen things like energy, all the cattle market has been going up. All the grain markets have been surging higher. Some of the metals have been surging higher. So all your input costs here, things that are going into like automotives and things like that, have all been pushing higher. And that's the reason why you're seeing that edge up in that expectation for a higher month over month CPI release. So you get into the CME's Fed Watch tool. Again, 2.7% chance that the Fed cuts rates. So essentially no expectations for any interest rate cuts. So what I want you guys to do, Google that CME's Fed Watch tool, bookmark that, but then start clicking going farther out. So currently right now, rates are sitting at 4.25 to 4.5. You go out to March, the expectations are for about a 21% chance that they cut 25 basis points. You go out to May, that's when another Fed meeting comes around, it surges up to 35, and then you get out to June, that's where it's over a 50% chance the Fed cuts rates. So when I tell you guys that the Fed is only expected to cut one time for interest rates this year, that's the thing that I'm looking at here. Where's the shift in the momentum of those expectations? Now getting back into the precious metals markets and the key levels that we're surrounding today, 27.15.50, so $2,715.50. We get a breakout above that in the gold market. I would expect to see new buyers come into that market and start to push that level up. You got a lot of things coming out here. You got, as far as the technicals on the chart, you got the MACD is positive. You got stochastics pushing up into overbought territory. Doesn't mean that it's overbought. It's actually coming off a little bit. It just means that we've got a slight bull market going on, and then you got DMI plus crossing over DMI minus, and that happened about on January 8th, and since then we've seen price momentum edge higher. So looking at the silver market, we've got a lot of things going on. We've got the 50-day moving average, the 200-day moving average, and then really your trend reversal point, 31.67. That's where, if we get above that level, I would expect to see a surge of buying come in, ETF buying, things like that, and market momentum chasers try and take that market back up to 32.50. Now getting into your performance leaders, your one-day performance leader, still you start to look at palladium being your best performing commodity on the day, up 1.87%. You got silver up 1%. Then you get back into the basics here. You got your heating oil going up, your gold futures as well, surging all right around 1%. And then you go year to date, heating oil is going to be your number 2 best performing commodity, up 10%. Natural gas, copper, crude oil, all those particular things surrounding anything energy related, as energy prices had broken out to the upside. So generally what I do when you get this big event like non-farm payroll, you got a Fed meeting, you got CPI, anything that people are really watching and hone in on, what I'll typically do is put some orders out there with clients to try and capture any kind of sudden price volatility that's extended to the upside. So we are working some overhead sells on the gold, silver, copper. It's not that we're saying that the rally is over. It's just prudent to take a little bit of positions off the table here and reassess, because we expect some volatility in these markets, especially coming into the inauguration here over the weekend. And with Trump, he could announce some tariffs, and we could get that next dip there on the metals to start reestablishing some prices. So you guys got any questions, reach out to me, 312-858-7303. Remember, futures and option trading does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.